Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to be talking about Bitcoin and looking at the current price action, comparing it with past market cycles. If you guys like the content, please subscribe to the channel and check out this Telegram channel here, which you can also find in the description below. Currently have over 2,400 members and growing every day. So we're just going to briefly look at some of the price action that's going on. So let me put the price back on here. You can see over the long term how significant, if you followed this channel at all, we've talked about the 20 week, the 100 week, and the 200 week extensively. We've had videos where we talk about the 50 week and the 300 week as well. But ultimately, these three are the primary ones that I use. And, I get comments all the time that say, it's more complicated than that. And of course, it's more complicated. That's why I make videos constantly on the stuff. But this is one of those videos where I keep it as simple as possible. And anyways, you can see how these three moving averages typically, how well they govern the longer term structure of Bitcoin. Because in a bull market, you can see the 20-week holding support as when we're in a bull market, the 20-week moving average being that support line. And when we're in a bear market, the 200-week moving average being our support line. And the 100-week kind of being this this interesting transition region where we kind of come down to it in a bear market, but we don't hold it. And that's happened in the last market cycle. You can see we came down to that 100 week and then failed to hold it, went down to the 200. In the current cycle, went down to the 100, failed to hold it, went straight to the 200. Again, this time though, because our thesis is that cycles are getting longer, we would expect again to have a longer accumulation period than ones we've had in the past. And because of this, it makes sense that we're not already off to the races and seeing the price of Bitcoin take off. Because if it were, I know it's not exactly a 4-year cycle for even the people who talk about the 4-year cycle, because it's based on the halving, and the halving is not exactly every 4 years. But if we were just to look at January 2016 and then compare it to today, which we're already in April, the price here was already holding the 100 week and the 20 week as support. By April, it had held the 20 week as support for months, and currently we're below the 20 week, and the 20 week ultimately is what I see being our that being the precursor before the bull market gets in full gear. So again, in this market cycle over here, the first time that we broke the 20 week, we failed to hold it as support and went back down to the 200 week. So we had the 200 week, then we held the 20 week as resistance, came back to the 200, went above the 20, failed to hold it, went back to the 200, and then after going back to the 200, after hitting it twice, so we hit it back in this region over here, we hit it. Obviously, we hit it here and here, but we also hit it back after we had broken the 20-week moving average. So we hit it not only before we broke the 20-week, but also after. So in the same market cycle, in the current market cycle, you can see we hit the 200-week moving average. Okay, we then broke the 20-week, but ultimately we came back down to the 200-week. So we did essentially the same thing that we did in the past market cycle, except the move, the way that we got there, was very different. In the past market cycle, it just took a few months to go through this entire process. In this market cycle, it took, from November of 2018 to March of 2020. Here, it didn't take nearly as long. And let's just take a measured move so you get an idea. So from here, the first time we hit the 200 week, to then after we broke the 20 week back to the 200, it took 217 days. Okay, but in the current market cycle, the first time we hit that 200 week to then we got back to it, it took 462 days. So if we're repeating the overarching market structure, then you can see that the time in between these key milestones, they're getting longer. And we've also noted how in the first, or say in this cycle over here, we only failed to hold the 20 week once. And this one we've already failed twice, so hopefully the third time that we try to hold it at support, maybe in a few months, maybe later this year, maybe by that point, depending on what the price is, maybe the 20-week moving average is say $6,000 or $7,000, then maybe we can hold it. Because we were unable to hold it at $10,000, we were unable to hold it at $8,500, maybe we can really start building the momentum at say $6,000 or $7,000. Now, what if we were to continue the structure? So one of the things I want to, I want to show you guys is when, ultimately to get this bull market started, you can see during the last cycle, what preceded it was the 20-week going below the 100-week, okay, and then going to the 200-week. So the price did. But the 20-week also went to the 200-week. It converged. They basically converged to the same price, almost. And let's go ahead and remove the price so that it becomes crystal clear. So you can see how the 20-week moving average breaks the 100-week, goes to the 200-week, okay? And then it holds that 200-week as support, and then later on the 100-week holds that 200-week moving average as support. So you can kind of see this concave up pattern here. So you can see, kind of like, this concave up pattern, and then you can also see the concave up pattern here that's much longer. Okay, so you can see those fairly clearly. And now the idea is, are we going to have to repeat the same thing in the current market cycle? So that's what is unclear. But let's just suppose that is what we're going to do. So I'm not saying it is, but we know that it is a possibility because it's what happened in the last cycle. So let's just suppose that is what happens. What would happen in that scenario? Well, what it would mean is the 20-week would need to get below the 100-week and get down to the 200-week. Now, you can see these three metrics are already starting to converge. So in order for them, to converge to each other, the price doesn't even have to change that drastically. Ultimately, if the price were just to stay the same for, 200 weeks, they would all just converge anyways to the same price. It's not like the price has to drop. Obviously, we know that Bitcoin is volatile and the price will go up and down, but it's not hard to imagine these three moving averages getting closer, just like they did over here. The 20-week came down to the 200-week, but the difference, okay, between this cycle and the previous one is here the 20-week came down to the 200-week and then went off to the races, followed by the 100-week doing the same thing. Now, in this cycle, the 100-week has not gotten to the 200-week moving average yet. So I'm not saying that this has to repeat the same way it did, but if it were, then you can see that we're heading that direction. Unless, notwithstanding a huge rally in the coming weeks, then this is what is likely going to happen. I'm not, this is not financial advice, it's just me analyzing the market. So let's suppose that we were to continue doing something like this. So let's suppose that the 200-week continues to kind of move up. Maybe it flattens a little bit as prices converge, and then ultimately, starts to take off again. Oh, sorry about that. So let me draw that again. So let's say it moves up. Maybe it flattens a little bit, and then starts to move up again. Okay, into the next peak speculative bubble phase. So what would that mean then for the 20-week and the 100-week moving average? So we know for the 100-week, if it were to repeat the last market cycle, then we would ultimately, see it converge with the 200-week. I don't think it's going to go below it, but ultimately do something like that. So let me redraw that because I don't want to draw it going below it. So if we were to just take the brush and come in here to the 100-week, and more or less just draw it kind of flat because it doesn't really change that much day to day. We might expect it to come in here and then hold that as support and then go off like that. Okay, and then let's go ahead and change that to orange so we can kind of tell a continuation of this pattern. And then the 20 week. What would the 20 week do? Well, if you go back again and look at the prior cycle, the 20 week converged first. And we already saw this happen once. But the question is, was this more or less just a fake out and it's just kicking the can down the road? People got excited, but ultimately we did show a video that if you average these prices out, this valley and this trough, it more or less just looks like a long extended accumulation phase, many, like I would say twice as long as this one over here. So there is a video on that a few months ago if you want to check it out. So the final one that we would draw would be the 20 week. So we would expect the 20 week to ultimately hold support on the 200 week, first. So ultimately we would expect it to drop below the 100 week and then hold it as support and then kind of go off on its own as well. So something like that. And let's color code that based on the 20 week. So where would this put us? So let's go ahead and put the price, or sorry about that. Let's go ahead and put the price back on so you can see the price. So ultimately, if the price were to say oscillate in this region, if it does come back down to the 200 week, then clearly these moving averages will converge sooner. If it does not come back down to the 200 week, then it will take a lot longer for them to converge. And we're not saying they have to converge. We're just noting that if they were to repeat a past cycle, that is what would happen. So this would mean essentially that the 20-week moving average would meet the 200-week moving average at a price of around, say, $6,500, and maybe it would happen in the summer. And so clearly, the price could just stay pretty much humdrum until then, for all I know, and these moving averages would still converge. The 100 week would also meet the 200 week at around, say, a price of $7,000. And you can see that this, if we continue lengthening cycles, and we're not going to really move into a bull run imminently, which is what we would need to do to say that we're on a 4-year cycle, which I don't think we are. I think the ship has already sailed on that theory, but some people are holding out hope that that's the case. But the evidence is there, I think, that it's not. Then the 20 week would ultimately start, it would really start picking up in 2021. And you can see that it wouldn't even get to an all-time high. And this is just a crude drawing. Obviously, this isn't meant to be an exact thing. It wouldn't even get to an all-time high until sometime in first or second quarter of 2021. The price would take longer potentially, but you can see that ultimately this would be propelling into our next speculative bubble. And if you look at and by the way, I was talking about the 20 week here. If we measure it across, that's April 2021. So that's more of a local one. If we actually look at the 20 week from the peak of the last cycle, it was at 11.7, 11.5 or so. So I mean, we're still talking, say, the second quarter of 2021. But then we would want to see the price. And I think the 20 week would likely be a little bit flatter. I don't think it would increase that rapidly. It would probably do something like, stay slightly lower for longer, because we would expect the price to stay above the 20 week moving average, because this is our gauge for whether it's in a bull market or not. So if our target price is, say, like, let's say it's $100,000 out in, say, 2023. Then the 20 week would obviously need to act as support for several years, and we would then see the price go off the 20 week by a significant percentage, maybe 50% or something, and then go up to that 6-figure benchmark somewhere around that point, and then we would come back down into another bear market, which would coincide with the 2024 halving. And I think that 2024 halving would help reduce the volatility of the next bear market and keep us from crashing quite as hard, because we've seen that macro level volatility is decreasing. I don't think it's going to be the Kickstarter for another bull run. I think it's more so going to be a medicine that the price of Bitcoin can take to stop the bleeding from this current cycle peaking sometime just before that halving. And then I think that the 2028 halving would ultimately be, say, the catalyst for that next cycle, and then the next one would be peaking sometime in, say, 2030, 2031, and then the next cycle after that would be a decade later, so like 2040 would be the next peak. So more or less my general thoughts, and there's obviously a lot of there's definitely some error in what I'm saying because I clearly don't know what's going to happen. But if I had to guess, if I just took a guess at what I think is going to happen, I would say that, and I know this is not nearly as bullish as a lot of people want, but and this does not take into account fundamental effects of Bitcoin. It's just looking at the mathematics behind it. So if the price action continues on the same path that it has been on for the last decade, and it continues that for the next 2 decades, we know extrapolation is a dangerous thing. I mean, I have a PhD in engineering. I trust me, extrapolating is not a good thing, generally speaking. But here, it's kind of the best we can do in terms of people that are wanting to get an idea of what Bitcoin is going to do in the future. And what we can say is, well, if the math behind the price continues the way it has been, then it would likely put us around 6 figures in, say 2023, sometime in that time frame. Maybe it'll go to, say, 300,000 or 400,000 by 2030, 2031, and then maybe around the $1 million mark by 2040. That's generally what I see. I don't think people are some people think, they say, oh, well, stock to flow says we're going to go to 1 million in 2028. I don't think the math is there. I really don't. I don't think it is. And you can imagine different scenarios where the stock to flow really wouldn't work as well, because imagine that the block rewards for Bitcoin, instead of just having every 4 years, what if it had been different? What if they chose it so that, say, it was cut by 90% every 4 years? Then clearly it would have primarily benefited the people who got in very early. Even cutting them by half benefited the people very early. But imagine as a world where Bitcoin was kickstarted by, a 90% reduction in the supply going to the block rewards, or something like that. What if it had been, say, a cut of only, say, 2%? Then people probably wouldn't be as incentivized to continue mining, because they're not really benefiting that much more than the people that would come in later. So I think those are cases where the stock to flow model would break down. And I think, you can, it's not a bad model. I think there was some thought that was put into it. But I think ultimately lengthening cycles are going to play out. And the way the stock to flow model looks now, even if the price, I think so, I kind of see conflicting things, because a lot of people will say, well, if Bitcoin doesn't go to $100,000 or $250,000 right after the halving or in 2021, then the stock to flow model is invalidated. But what I think is going to happen is they're going to say, well, in 2023 or 2024 or whenever we do get there, they'll just say, oh, well, look, it hit it at the very end, so it's still on track. And I think they'll be able to continue with that narrative. But then the following market cycle, I think it's going to take much longer, potentially out till 2030 before we see the price continue to pick back up again. And I think then it's going to become more evident. Now, I would love to know what you guys think. I know there's a lot of people that are big proponents of the stock to flow model. Obviously, I'm not going to say it's completely untrue. There's always a probability that it is true. There's always a probability that the 4-year cycle is true. I think it's silly to unilaterally discount something completely. With that said, I'm not betting my money on say an every 4-year thing, because if I were, then that means that inevitably when Bitcoin is not 6 figures in 2021, that means people would sell. Because they say, oh, well, the 4-year cycle is not true, then Bitcoin's never going to recover, or something like that. And then with the stock to flow model, I think there's going to be some similar sentiment over the years, and maybe they'll tweak it. I don't know, but ultimately, I think cycles are lengthening. I think we're seeing diminishing returns. I certainly don't think Bitcoin is getting to $1 million in 2021. It's not getting to $1 million in 2023. It's likely not getting to $1 million in 2030. And we can argue all day about it, but time will elucidate the truth. And ultimately, if you can buy into Bitcoin now, and even if you are able to sell at six figures, then you're still doing quite well for yourself. The more people that come in, the higher the price goes, the harder it is to move up that curve. It just takes larger and larger volumes of money coming in. And ultimately, we've shown on this logarithmic regression chart. So if you want to check it out, it's intothecryptocharts.com. If you have a problem with it, just type in like https://www.intothecharts.com. I'll put that in the description below. But you can see that we're flattening out. We're seeing this logarithmic growth. The exponential growth is decaying. We're not seeing it continue to go up as quickly. It's fairly evident. This curve here was fit to non-bubble data. I've seen another article, I saw an article a while back saying, that we can't say that this is by any means, or if we were to say plot it on a log-log scale, there's no correlation. Well, the person included, the data points from speculative bubbles, so they're including it from irrational price points. They're including it when people were buying because they heard their friend was, or their grandma was buying. These speculative bubbles should not be taken into account when fitting the data. And if you remove those, then there is a clear correlation between the price at that scale, on a log-log scale. I know this is not log-log, but that was another article I read. So I'm basically getting myself into a lot of trouble in this video by talking about a lot of other theories and articles. But if you're going to fit the data and look at a correlation, don't look at a correlation between speculative bubble phases, because it's irrational. Look at the rational moves over the long period, over the long time frame, and then make your judgment. Then look at the correlation coefficients between them. Then plot whatever you want to plot, but remove speculative bubbles from the equation. So I hope this video has been informative. Again, if you guys like the content, if you like a different approach to the markets, not just saying Bitcoin's going to $500,000 in 2021, then I think this is a good channel for you. Usually we also pull up a lot of other analysis, like custom charts that I've made on lengthening cycles, custom charts on a lot of different coins like Ethereum, many other coins we've looked at. So if you guys like that content, we have daily videos almost that I think you guys would like. So please subscribe to the channel. If you want, check out the Telegram channel. You can find that in the description below. And then for people who want premium content, I do have a newsletter, a weekly newsletter. So if you want to join that, you can also find that in the description below. And that'll be delivered to you every Sunday, I think. I just started it. But every Sunday, and we'll go from there. And we'll provide, say, like risk analysis, logarithmic regression analysis. Sometimes we'll look at traditional markets as well. Even things like Tesla, we have stuff there. Total cryptocurrency market cap valuation, so whether it's undervalued or overvalued, we have that as well. So we have a lot of stuff in the newsletter. We have a private Telegram group for those people so that we can discuss the charts, a little bit more candidly. So yeah, that's that. I hope you guys enjoyed the video, and I will talk to you guys next time. Bye.